Tesla is up 12% after reporting their Q3 figures, a much better quarter than what was expected. And personally, I was completely wrong. I thought the quarter would be worse than this. I was expecting margins to stabilize. Maybe expecting is a big word. I was hoping margins would stabilize, and they did much better than just stabilize. And so the stock right now on the daily, as you can see, we are going to be filling that basically gap that happened after the 10-10 event. When we went into the earnings report, the earnings call, the stock went under the 200-day moving average. So now on the weekly, you can see that, well, we're going to have a green candle and rebound above that 200-day moving average, which is always a positive thing to see. Now in this video, let's go over everything you need to know from the earnings report and from the earnings call. I wrote down a couple of things, of course. Make sure to share your thoughts and comments down in the comment section below. Like, subscribe, do all of that. We really appreciate it. If you want to support me even further, do check out the link down in the description and in the pinned comment with the top 10 best stocks to buy now, or go to fool.com/couchinvestor. Thank you very much. All right, so let's start with the main things here. So first of all, we delivered strong results in Q3 with growth in vehicle deliveries, both sequentially and year on year, resulting in record third quarter volumes. We also recognized our second highest quarter of regulatory credit revenues, as other OEMs are still behind on meeting emissions requirements. Our cost of goods sold per vehicle came down to its lowest level ever to around $35,100. This is incredible and one of the reasons why margins are better this quarter. They said here, despite sustained macroeconomic headwinds and other pulling back on EV investments, we remain focused on expanding our vehicle and energy product lineup, reducing costs, and making critical investments in AI projects and production capacity. We believe these efforts will allow us to capitalize on the ongoing transition in the transportation and energy sectors. They also say here, increased AI training compute by over 75% in Q3. Cybertruck became the third best-selling EV in Q3 in the United States, behind the Model Y and the Model 3. Now, as for the quarter, so total revenue increased 8% year over year. Total gross profit is up 20% year over year. Total GAAP gross margin up 195 basis points year over year, and up close to 200 basis points actually quarter over quarter. Now, what was interesting to me is that, well, if you look at operating expenses, that's actually down quarter over quarter and down 6% year over year. Income from operations up 54% year over year. Operating margin, huge increase quarter over quarter and up 323 basis points year over year. So all great. Yes, we're going to touch on the automotive gross margin excluding credits in just a bit. So patience, por favor. Adjusted EBITDA up 24% year over year. Adjusted EBITDA margin 18.5%, up 243 basis points. Let's skip all the rest here because, you can read it yourself. Free cash flow is up 223%, now at $2.74 billion for the quarter. And they have, well, a very, very big cash pile of over $33 billion, and that's up 29% year over year. This is quite remarkable. Let's be honest, they're still investing a lot, right? CapEx, if we go and look at it later down the line, CapEx is still increasing. It's expected to exceed $11 billion for the year. When you do that and you're still printing billions in free cash flow each quarter, that's quite a positive and a strong position to be in. Now, the main reasons why revenue is up and profitability is up is because of these things right here. So revenue-wise, growth in vehicle deliveries, growth in energy generation and storage and services and others, higher FSD recognition year over year, higher regulatory credit revenue, and the hit here is reduced S3XY vehicle average selling price, or ASP. Now, the same thing will be said here for profitability and the plus points as well. So 1, lower cost per vehicle. 2, growth in energy generation, storage services, etc. Higher FSD revenue recognition year over year, growth in vehicle deliveries, higher regulatory credit revenue, and a decrease in operating expenses, including cost reduction efforts. As for storage deployed, we can see that that increased 75% year over year. It's down quarter over quarter, but we already knew those numbers from the production and delivery reports. Supercharger stations increased 20% year over year, and supercharger connectors increased 22% year over year. 2 days ago or a day ago, depending on when you're watching this video, they produced their 7 millionth vehicle, so congrats to them. They also told us that Cybertruck production increased sequentially and achieved a positive gross margin for the first time, much sooner than expected. They also say here preparation of the semi-factory continues and remains on track with build schedules to start by the end of 2025. Yes, we know right now we've seen already videos and pictures. Those are just pilot production vehicles, so the full one is probably 12 months away. As for the AI software and hardware, they say here they deployed and training ahead of schedule on a 29,000 H100 cluster at Gigafactory Texas, where they expect to have 50,000 H100 capacity by the end of October. As for FSD V12 miles and FSD miles in general, you can see, well, the huge increase that has happened already this year. With regards to battery powertrain and manufacturing, they say here in Q3 we produced our 100 millionth 4680 cell and continue to progress our dry cathode manufacturing lines. Switching to the energy generation and storage, they say here Powerwall achieved record deployments in Q3 for the second quarter in a row, ramp of Powerwall 3 and the Lathrop Megafactory continued successfully, with Lathrop demonstrating 200 megapack production, that's 40 gigawatt hours annual run rate in a single week. Now, the success of Powerwall is probably also one of the reasons why we're seeing some small weakness in Enphase. We've talked about that in the Enphase video. They also say here the Shanghai Megafactory remains on track to begin shipping megapacks in Q1 2025. This is again going to be a money printing machine for them. By the way, the energy side of the business has gross margins of 30%. Well, actually a little bit more than that. And so, as for the outlook, they continue to say the same thing, which is great, plus they added some extra things here. So one, despite ongoing macroeconomic conditions, we expect to achieve slight growth in vehicle deliveries in 2024, which means that Q4 is going to be a quarter where they will deliver probably more than 500,000 vehicles. Energy storage deployments are expected to more than double year over year in 2024. Then as for the product, that remains unchanged, which is great. Plans for new vehicles, including more affordable models, remain on track for start of production in the first half of 2025. These vehicles will utilize aspects of the next generation platform, as well as aspects of our current platforms, and will be able to produce on the same manufacturing lines as our current vehicle lineup. My guess is also that the refresh Model 3 comes into play in those words here. Now, a quick thing I want to mention here, and that's with regards to automotive regulatory credits. Just so we're clear, yes, it's a big part. I mean, it's a big part. It's part of the business right now. I mean, why not take it? But let's make one thing clear here. As you can see, or maybe actually you cannot see it. Maybe now you can. You can see here Q2, Q3. Q3 is actually lower than Q2. So yeah, they're doing better with fewer regulatory credits. Moving on to the other stuff. So Consensus Gurus here shows us on what they beat and on what they missed. So they missed on revenue by 1.3%, missed on automotive revenue by 1.9%, and missed on energy generation and storage by 10.3%. Although, I mean, that's quite a big miss, but okay. All the rest they beat and beat quite comfortably, especially, I mean, if you look at free cash flow, they beat by 54.9%. So basically, this quarter came out of nowhere, right? The results are much better than expected. Now, one thing that is not talked about enough is basically this. So this is Tesla's worldwide cost of goods sold for the Model 3 and Model Y. Back in Q1 2020, that was at $41,235. We're now under $32,000. That's insane. Now, of course, you start here extremely high in a period where raw materials, stuff like that, you haven't ramped up enough, you're building factories and all of that. So yeah, you're starting at a super high point, but to go from over 41,000 to now just under 32,000 in what, 4 years? That's quite something. Then if we switch to the Tesla automotive gross margin excluding regulatory credits, I hoped that 14.6 was the bottom. So maybe if we were at 15 or something, I would have been happy, or at least not lower than 14.6. I'll be honest. Now we're actually sitting at 17.1%. So yeah, not too bad. Now, a couple of things that were mentioned here during the earnings call. I did not write everything because, let's be honest, the audio was horrible and half the time it felt like a podcast / TED Talk. So, okay, I wrote down these things. If I missed some major things, please write them down in the comment section below. So Elon expects, that's very important to note, Elon expects. Just because he expects doesn't mean these things are going to happen. But okay, 20 to 30% vehicle growth in 2025. That's quite something that's very, very positive. Then with regards to the cyber cap, once they reach volume production, should be at around 2 million units per year. That's their best guess. As for the 4680 batteries, they say should be the most competitive ones in North America, but that does not mean that they will not be buying from their partners. They also said that sustaining margin that we're seeing right now in Q4 will be challenging, so they're already preparing us in case it comes in lower. As for financing, so that's recognized as upfront reduction in revenue, so that's clear. CapEx will be in excess of $11 billion for the year, and I think it was 26, 27, should become a bit lower, I think at around $8-9 billion or so. As for the lower interest rate environment, that's a given, right? Lower interest rates have a massive impact on vehicle demand, and I even think they touch on the awareness issue. They figured out that maybe advertising will help the business, will help raise awareness to how affordable Teslas are. So maybe we're going to see some change on that front. When talking about the Tesla Semi, they're extremely bullish on that, extremely positive on that. So Tesla Semi will have FSD hardware already in it and will be ready whenever the system is ready, whenever they're ready to launch and ramp up the Tesla Semi production. So yes, there is the FSD hardware in that. They also said that whoever tests the Tesla Semi, they don't want to go back to whatever they were driving before. The Tesla Semi is going to be a huge, huge success for them once that starts. I know some people are like, oh, but they're late, where is it? Okay, they're late. That doesn't mean it will not exist. The Cybertruck was late as well. It exists and it beats the competition already today. So yeah. They also said the following: if hardware 3 cannot support unsupervised FSD, Tesla will upgrade the computer for free. So if that's the case, yes, I think it's going to cost Tesla quite a lot to upgrade that. They also said, we think we'll be able to have driverless paid rides next year. Okay, that doesn't mean much. That doesn't mean they're going to generate millions of dollars in that. No, just means that they expect in 2025 people to order driverless Teslas and pay for it, a bit like Waymo. Switching back quickly, and this is a quote, I don't know why I put it at the last thing here, but this was a quote with regards to the hardware 3 situation. They said, there is some chance that hardware 3 does not achieve a safety level that allows for unsupervised FSD. If that turns out to be the case, we will upgrade those to those that have bought hardware 3 FSD for free. So basically, they are being honest here, they just don't know. Which, if we're being honest here, is much better than to say yes or no. So at least here, they're being fair. If it cannot happen, they'll upgrade it for you. So overall, I think it was a much better quarter than what I was expecting. And I think the market was surprised as well. Now, I don't think we're out of the woods yet. I think 2025 is going to be a big year for Tesla with refresh models, new models, Cybertruck ramping up, Megapack factory in Shanghai, interest rates coming down, late 2025, Tesla Semi. It's going to be a big year for Tesla, but yeah, margin-wise, demand-wise, remains to be seen what happens in the weird environment that we're in. Plus, if we're being honest, I think, yes, in the coming weeks, we have a small election going on, and I think that might be bullish or bearish depending on the result. So yeah, overall, those are my thoughts. This is everything I think you need to know about the quarter. I think the earnings call, despite it being the usual boring talk, I think it was a bullish talk, a bullish tone from Elon and the team. I think they're in a much better position, and they know they're in a much better position right now. So that's great. All in all, I'm happy. Stock is up. It's my number one position. So of course, I'm happy. And yeah, we'll see. We'll see what happens. Like I said, I don't think we're out of the woods yet fully. So there is that. If you enjoy this type of videos, like, subscribe, do all of that, and I'll see you all in the next one. Bye-bye.